Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look what is going on currently on the euro currency. You'll see that market still holds right around our significant resistance area. That includes double pivot points as monthly and as weekly. That is also the confidence resistance on the 4-hour time frame, and also an agreement with some intraday ABCD patterns. Now you can see that market has shown the logical price action. It has shown the bounce from this area to the downside with this yesterday's candle. Trend holds bearish on the daily time frame. Market now stands not at oversold. So if we will try to estimate the target of the potential move to the downside on the daily time frame, then probably the nearest target will be 129.50 area. That is some 618 extension of that lightning bolt looking ABCD pattern to the downside. And that is also the monthly pivot support one. It's 129.46. It's right here, this thick line, lime line in this area. Also, you will see that that is relatively close to the daily oversold again. But recall that in our weekly research, our weekly thread, we said that that could be overall move to the downside. That could be the retest of long-term parallel channel border that stands for the current week around 129 area. It's right here, and you can see right around this major 618 support on the daily time frame. So that will be the minimum destination in the medium-term perspective. What will follow after that, it's very difficult to say. If market will break to the downside, this area returns right back inside of the long-term parallel channel, that will lead to the further acceleration to the downside. If market will hold there and just will retest it and bounce to the upside, that will be mostly in a row with the bullish expectations. But anyway, in the short-term perspective, any scenario suggests a bit deeper move to the downside. So still there are some risk exists for the short positions that probably you have currently, and let's discuss it on the intraday charts. On the 4-hour time frame, we see in this circle the pullback from this area. On this chart I have only the weekly pivot point, but recall that here a lot of different levels stand. The trend holds bullish on the 4-hour time frame. And the major risk, as we have discussed already, stands with this ABCD pattern to the upside. You can see that market by single leg has accelerated right to the 127 extension of that ABCD pattern. Very often when market shows such kind of the price action, it shows some pullback to the downside. Usually this is 618 retracement or 50% retracement. So we have this, and could proceed higher to the 1618 extension because the initial impulse to the upside was significant. I do not want to say that this has to happen, but that is the risk. You can see that 1618 extension stands 131.65 area. That is also, we have more recent ABCD pattern, A, B, C bottom. 100% extension of this pattern stands in the same area. Also, that is the 4-hour 618 resistance, 131.84 area. It's right here. And the last moment, that will be the 127 extension of that swing. From that high to that low, 127 extension stands in the same area. So that will be a significant resistance, and that the risk that market still could show this appreciation to this level. That's why most cases we are focused on entering with the open the short positions right at the significant resistance areas, because entering short in this area will let you to protect your position, because our market has the tendency to respect such areas as this one. You can see market has shown the significant bounce to the downside. So if you have entered short, for instance on our double repo sale pattern that we have discussed when we talked about the entering on the short side of the market, now you have a lot of room to place your stop to the break-even, because if market will return right back to these previous stops, this will be the significant challenge on the potential move to the upside. Because if market will show just the bounce after this thrust down, it probably will show some retracement that should not reach your entry point, that was somewhere around the 130-130 area. But if market will return right back inside of this range, then probably we will see some further appreciation to the upside, at minimum to these areas around 131.65, 131.80 area. That is the plan how to control the risk. I suppose that it's better to move your stop to the break-even point if you have the short position somewhere from 130 area. Well, another possible development here we could find on the hourly time frame. So you can see that's some sort of the widening consolidation. This is thrust to the downside. That is our double repo pattern. That, by the way, has not been cancelled, because if you will see, market has not closed above the 618 resistance of that swing. From that high to that low, that was the confirmation bar of the double repo. 618 stands somewhere in this area. So you can see, although market has touched it, it hasn't closed above it. So that's why we could say that this a bit goofy looking double repo pattern has worked. Now it has hit its target. Somewhere around 50% support has been reached by this move, but not this, particularly not this moment is very significant. Take a look at the current price action. You can see that this could be just the ABCD retracement of this thrust. If this will happen, then market will stop somewhere below this coil. That is our significant area to watch for. If market will show the acceleration and returns right back in this area, that will be the attempt on the potential move to the upside. Because that also could be some sort of the, I don't know, maybe some sort of the butterfly pattern to the upside after this move on the hourly time frame. That also could happen. That's why I suppose that moving stop currently at the break-even point around 130-130 looks reasonable. Because as I said, if market will return back in this area, this will be the possible attempt on further acceleration to the 131.65, 131.80 area. If not, then market should stop somewhere below this coil. By this, for instance, ABCD retracement, and will not reach your break-even stop. In this case, this will be ABCD retracement and further a move to the downside according probably with our daily expectation. So that's our current view on the market. Keep an eye on this area, especially around 130-130 area. If, by the way, if market will return right back in this area, that also could lead to some butterfly, as I said, since 127 extension. This potential butterfly will stand in agreement with others extensions of other patterns. So also monitor this possibility on the 4-hour time frame, since it also carries some possibility for trading, especially for the scalp traders. Well, if you do not have short position currently, well, in this case probably to be patient and wait for some development. So if market will return right back here, and probably it's better to wait when the market will reach this significant area of resistance to enter short, or you probably could try to enter long in the scalp trade if market will form some sort of the harmonic patterns in this area. By the way, this will not be the 3 drive, because if you will measure these extensions from that swings, they will not coincide in the tight range. Hence, probably this couldn't be treated as the 3 drive pattern. So that's all for today. Keep an eye on this development. I suppose that within the current trading session we will be focused on this retracement, and I hope that later market will confirm our medium-term bearish expectations with the downward continuation on the daily time frame.